morning. Welcome to CATEX-TV. My name is Frank Fortunato. This is a live broadcast from Princeton, New Jersey. Today is Wednesday, March 3rd, 2010. It's 11:30 a.m. Eastern Standard Time in the U.S. It's 4:30 p.m. in London. In Hamilton, it's 12:30 p.m. and in Mexico City, 10:30 in the morning. If you need to reach us during the broadcast, you can phone in toll-free at 1-866-67-CATEX. Overseas, our AOL instant mail address is CATEX-TV. For the news, some information that's come in. Automatic Data Processing, ADP, has announced that only 20,000 jobs were lost last month. This is the lowest total since 2008, before the recession began. Also, the American service industry grew at a higher than expected rate, according to the Institute for Supply Management. And Captain Sully Sullenberger, the pilot of the Miracle on the Hudson U.S. Air flight from a year ago, has announced his retirement from U.S. Airways. I wonder where he'll pop up next. Now to our main news. Well, they seem to be lining up to do this. Now it's Nissan's turn. They're recalling 540,000 pickup trucks, sport utility vehicles, and minivans. It's identified problems with the brake pedal pins, which come loose, and faulty fuel gauges. The Titan, the Armada, Quest, Infiniti QX56 vehicles built between 2008 and 2010 are going to be recalled. Nissan said there had been 3 instances of brake pedal pins disengaging, but no accidents or injuries. Japan's third largest car maker is notifying owners of affected vehicles and asking them to be brought into dealers to be checked. It's also encouraging customers whose vehicles might have the fuel gauge problem to keep their tanks at least half full. Nissan blamed the supplier of the brake pedal pins for the manufacturing error. No word yet as to whether or not Toyota owns the supplier, as GM claimed their recalled vehicles were affected by a Toyota-owned supplier yesterday. Liberty Mutual up in Boston came out with their financials. They saw net income fall 8% for 2009. However, full-year earnings came in at a little over $1 billion on revenues of $31 billion, up 7.8%. For the fourth quarter, net income rose 2% to $456 million on 2.6% lower revenues of $7.9 billion. So there's more efficiency there. Ed Kelly, the group chairman, president, and CEO, said the results reflected the continued strength of our core businesses in challenging economic and a competitive environment. Some highlights: private passenger motor contributed about $2.5 billion in the quarter and $9.8 billion for the full year. Also, workers' compensation quarterly premiums grew 1.8%, up to $947 million, but they did fall 14% for the year to just a little bit over $4 billion. Homeowners' net written premium increased $572 million, up to about $800 million for the quarter, and jumped almost 27.5% to $2.4 billion for the year. Liberty International Underwriters' reinsurance written premium fell 23% to $194 million for the quarter, and 3.4% for the overall year, down to about $980 million. Including the impact of catastrophes and net incurred losses, Liberty's combined ratios worsened by 4 points in the quarter to 99.3, but they did do better for the whole year, picking up 2/10 of a point, up to 99.9%. Other numbers coming out from SCOR in Paris, they've recorded a net income of about 370 million euros, which is $504 million US for 2009. This is up from 315 million euros in 2008. The combined ratio for non-life, excluding the World Trade Center arbitration, was 96.8%, which is better than the 98.6% in 2008. Natural cat claims contributed a little over 5% to the combined ratio. SCOR Global Life's operating margin was 5.8%, roughly in line with the 6% achieved in 2008. SCOR generated a 2.4% return on its investments, in line with the performance the previous year. In the January renewals, SCOR said that it had achieved an expected 3% increase in terms of the average gross written premium. Now, you have to take your hat off to them. They were given up for dead just a couple of years ago, and they're not only still ticking, they're doing pretty well. Well, this is like a soap opera, this Omega Invesco story now, and there's another actor involved. Let me see if we can put this together. Bermuda-based but London-listed insurer Omega has now published details of a conversation between Omega and Invesco lawyers, which implies that the UK-based Senkos Securities, C-E-N-K-O-S, is pushing for the changes to the Omega board, and that it was not Invesco's idea to ask for the special general meeting that's scheduled for March 12th. This morning, Omega gave out this information, saying that a phone conversation on February 26th between counsel to Invesco and counsel to Omega revealed, quote, that Senkos asked Invesco to call the March 12th meeting because a requisition needs to be made by a shareholder that holds not less than 10% of the company's shares. Senkos is also Omega's joint broker. Omega said that it wrote to Invesco asking for clarification on this. Invesco told Omega on March 2nd that this was indeed Invesco's position. The main shareholder in Senkos with a 22+% stake is Andrew Stewart, co-founder of Collins Stewart, while other senior board members hold a combined 20%. Invesco owns 15%. Now, here's where it becomes very interesting. Invesco has stated that it has requested that shareholders be given an opportunity to vote on changes to the board of Omega, which Invesco supports, but they denied that it has pushed any other shareholders to vote in favor of the proposed changes. In a report that's due to be published in this week's Insurance Times, investment advisor PIRC has recommended against voting for the Invesco board members. And the other point that goes on to say is that Invesco's joint broker, Senkos Securities, and not Invesco, has been pushing for the changes at Omega's board. Now, this is coming from Invesco. Invesco released a statement saying that it was not their idea to convene a special general meeting, but that they had requested it because Senkos had made such a request of them. And since Senkos owns 10% of Omega, Omega is the victim of Invesco using the same logic because they own 10% of Omega and they're requesting a special board meeting. So, Senkos owns 10% of Invesco. They exercised their rights as a 10% plus shareholder and requested that the company ask Omega to hold a special general board meeting. Invesco owns 10+% of Omega, and they exercised the same theory and then asked Omega to hold the special meeting on March 12th. And this now has been confirmed by Invesco. I'll tell you, this is, you need a scorecard to keep these guys straight, but it's going to be a very interesting March 12th meeting, actually. We'll see if we can get some more people to comment on this. Some news from London. A well-known individual in London is seemingly going to retire, very young. Holly Bellingham, the founder of the Lloyd's medical malpractice specialist Market Form, is going to step down as executive chairman. The Insurance Insider is revealing this. Ms. Bellingham departs more than 20 years after she effectively founded Market Form after a 1989 management buyout from Crawley Warren. Apparently there was a letter on March 3rd to staff in which Ms. Bellingham said this has been a difficult decision to reach, but having worked at Market Form and its predecessors for 28 years and in the Lloyd's market for over 30 years, I know it's the right time to retire. I feel very privileged, she said, to have seen Market Form grow from 4 personnel to now in excess of 150 people, and I know I owe an enormous debt of gratitude to all of them. The stock market in New York is up about 58 points right now. We'll go to a word from our sponsors.
You may have already seen the demonstration of the CATEX Global Exchange in action. Some of the features of the exchange and our Pivot Point 2 software are especially useful to facultative and excess surplus lines brokers and markets. Here, we see the opening page of the contract workspace, which shows some of the details of a facultative risk as seen by the listing broker. Behind this opening page are screens which provide details of the contract of certificate, details on the parties or markets on the certificate, details of the exposures on the certificate, including aggregate data of the underlying risks, details on each of the insured risks, policy or certificate documents, including document templates,